Hey, hey, hey. Trying to keep this stable. This ain't like my last one. My last one was way more stable. Hey, y'all, what's happening? How y'all been? So, y'all know it's your girl Tyra Jacqueline. I have not talked to y'all in a minute, but, life's got a little busy, a little hectic, and I haven't been able to come to y'all like the way I used to. I think I used to come to y'all like 5 times a week, but yeah, like I said, life got a little busy. You know how they say life be lifing and all that good stuff. But I'm here today with y'all. How y'all doing? First and foremost, good afternoon. And if you are watching me live, throw a one in the chat. If you are watching a replay, throw a two in the chat. And what I'm going to talk about today is just some knowledge that's, sometimes I would think is more common, but it's not. So, and y'all know what I do as a, teaching financial literacy, being a wealth educator, and credit. I'm going to talk about some credit tips that can help you in the short term and the long term. And some of the things may be common knowledge, other things may not be, whatever. But my whole goal is to teach you something, okay, as it always is, give you some info that's going to improve your life, your family's life, or your finances one way or the other. That's my goal, and that's always my goal. So, I want you guys to tune in. I'm go ahead on a little just go, okay? And if y'all got any questions, y'all can throw them in the comments. But in the event that I can't see your questions, just go ahead and inbox me, and I'll answer your questions. So let's just start with some stuff that's a little less common knowledge. And I shout you out too. And if you learn something, do me a favor, throw some type of emoji in the chat. I don't care what it is. If you learn something, or you could take a piece of information, go back to your people, go back to your family, your friends, whatever. Please do. It's all about each one teach one at the end of the day. But yeah, I'm gonna go ahead and start talking about some of these things that are less known facts, and explain them a little bit too, to help make it make sense. So let's start by talking with credit cards. And I was at a financial literacy expo a few weeks ago, and I asked a lady, I said, let me ask you a question. When do you pay your credit card bill? She said on the due date. So credit tip number one: you are not supposed to pay your credit card bills by the due date. Now, I know that might sound crazy. Like, hold on. Ain't no supposed to pay by time is due. Yeah, by the time is due, but not on the due date. You want to pay your credit card bill on the statement date, or it might be referred to as the closing date. And that normally is somewhere between like 3 and 5 days before it's actually due. You can actually look on your statements or call the company and find out when that statement date is. And why do you want to actually pay by the statement date? It's because that's what gets reported to the credit reporting agencies, guys, not what's on the due date. Okay, so let's say you have $1,000 limit and you done spent 900 of it, and on May 31st, the due date, you paid that bad boy off. So you know 900 to 1,000, that's 90%. But on your due date, you paid that $900 off, and you like, yeah, I got it. That's what's up. I paid my credit card now. Now my credit should shoot up, blah 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 blah, because I'm low in utilization and all that stuff. So understand that's 90% utilization first and foremost. Number two, what's going to get reported to the credit bureaus? 90% utilization, because you pay by the due date. But if you pay by the statement or the closing date, say you pay off that entire 900, what's going to get reported to the credit bureau is 0% utilization or 1% utilization, whatever you pay it down to, and that's going to increase your credit score. Why? Because utilization is 30% of your credit. So please understand, ladies and gentlemen, pay your credit card bills by the statement or the closing date, not the due date, because that's what gets reported to the credit reporting agencies. Okay, that's really important. So if you're a person that's been using your credit card and you're like, I pay off my credit card every month, yet my credit is not moving, that is why you need to pay it by the statement date. Okay, number one. Number two, I'm seeing this a lot lately when it comes to these whole debt settlement or debt consolidation companies. I need y'all to understand how they operate. You are basically paying this company to negotiate settlement payments for you for what you owe on debts, which you can do yourself first and foremost. Okay. So you're paying them, and you're paying them, and probably about, I think at about 6 months of paying them, and mind you, you're in with them. Contract or not, I don't believe they can do contracts with you, but contract or not, many people are in with these debt consolidation companies like 3 to 5 years. So let's talk about how you're paying them multiple $100s a month. Let's say you're paying $300 a month. You're paying them. Meanwhile, your bills, your credit cards, or your loans, whoever you owe, is not getting paid. So you're paying them. It kind of goes into an escrow account, and they don't start paying the actual company until months later. Okay, so and then your bills are not getting paid. So what's going on while you're paying this debt consolidation company? While you're paying this debt consolidation or debt settlement, whichever one you want to call it, now you're getting late payments. Boom, 35% of your credit, your credit score dropping 50 to 100 points. And late payments affect your credit every 30 days, not just that one time. Okay, every 30 days, every 30 days, that late payment is hitting your credit like that, y'all. Okay, and then now what happens after 6 months with accounts? They're either going to get charged off or go into collections. Okay, so now all these people you're not paying while you're paying the actual debt consolidation company. Now you got late payments, you got collections, and you got charge-offs. Okay, so let's say you pay these guys and you stay on the whole ride for 1, 3, 5 years, however many years it is. Now, these guys are in. Maybe they settled for you, which remember you can settle yourself with the company. Okay, you can if that's the route you're going to take. You can settle yourself with the company. You can also settle and do something called a pay for delete. And I'm gonna tell you like this: they don't like doing that, but they rather get some money than no money. Okay, so if you do, if you're going to pay off an account, you ask for a settlement for delete. Okay, pay for delete. Excuse me. Okay, and that's jumping into something else. So let me go back to this whole debt consolidation, debt settlement. Now I've been speaking to some people. Some people said no, they did not explain that to me. I had somebody else say to me, like, yes, they did tell me my credit was going to take a dip. But that's all they said was the dip. They didn't explain the what the entire dip actually means. Because even though that they quote unquote settle the actual debt for you, those late payments not getting settled. Remember that. Okay. And another thing, I'm pretty sure they're not telling you all debts have a statute of limitations on them. All debts have a statute of limitations on them. And depending on the type of debt, whether if it's a revolving or an installment account, and what state you live in, that depends on how long they can legally chase you for a debt. Fortunately for me, the state I live in on installment and revolving accounts, the statute of limitations is only 4 years. However, when them people are contacting that company on your behalf, they started the debt clock over. Or if you are calling these collection agencies and all that good stuff, they have a charge off or a collection for you. You are starting the debt clock over. There's some states where the statute of limitations is 10 years. So, with that being said, you may be in this doing this debt consolidation for X amount of years. Let's say you got a state like mine that's only 4 years. You already got a debt that's 3, 4, 5 years old. Yet you're paying this debt consolidation company to work on your behalf, but they can't even legally chase you for the debt anymore because of that statute of limitations. So when it comes to credit, there are a lot of things to be aware of. And people say, oh, well, I done had this debt and it's about to fall off. It's been 5 years, it's been 7 years. Let me tell you something. Y'all keep counting on this stuff to just fall off in 7 years. You're going to be sitting there, you're going to be still counting. Okay, that's number one. Number two, even if it do come off, most likely it's coming back from another company. Okay, but remember, statute of limitations is important, y'all. For those of you who are not in my financial literacy group, or even if you are in my financial literacy group, I have a whole chart in there that lists each state with the statute of limitations and the type of account. So if you need to join the group, just say yes, I want to join, and I will get you in there. Okay. But yeah, there's a statute of limitations for debt. Period. And don't just think it's going to fall off, because that's a joke. It really is. Okay. Okay. Um, so debt consolidation tears your credit up. And after you do the debt consolidation, once you graduate or whatever it is they want to call it, you're going to need credit repair again. Unfortunately, you're going to need the credit repair. So, yeah, you're going to be spending a lot of money to get your credit back together. All right. And then let's talk about people say, yeah, I paid off the collections. I took $5,000 and I had 3 collections, but my credit score is still low. Paying collections off does not increase your credit. And they say, oh, it's still low and it's still on there. Yeah, because you didn't negotiate a pay to delete. So if you are going to do that in writing, you need an agreement called a pay to delete. Do not just pay it off and that's it, because it will not come off of your credit and is not going to improve your credit. So y'all just sitting there paying these collections. No, get them things off. And that's what credit repair does. Please understand, credit repair takes the bad stuff off the credit. It takes the negative parts of your credit. Credit repair by itself doesn't even improve your credit. There's a second part to that, and I'm going to get to that. I'm gonna come back to y'all and finish this live and tell y'all what else you need to do in that process. But credit repair takes off the negative stuff off your credit report. Get that bad boy off of your report. Okay? Paying it by itself does not improve your credit, nor does it take it off. If you do the settlement, if you do an agreement with a pay to delete, yes, and get it in writing, ladies and gentlemen, because these people will lie to you. They trained to lie to you. They be breaking the law, trust me. Please get it in writing. So in the event that you need to take them to court, you have it in writing. Oh, they said they're going to delete it if I did this. Okay, and don't pay that full price. They already done sold it to somebody else for pennies on the dollar. So with that being said, you need to pay them a percentage only. Okay, so if that's the route you're going to take, that's how you do it. But make sure you talk to a professional before you do that. Okay. Um, Let me see. Another thing is people, they come to me, ask me, should they file bankruptcies? Listen, I am not equipped and I'm not qualified to tell you to go file bankruptcy. But I do know people that have filed it and then they didn't go through with it, and they said, "Oh, it's on my credit report, and I didn't even go through with it." Guess what? If you file for bankruptcy and you don't go through with it or you cancel it, they still put it on your credit. Okay, if it's discharged, it's dismissed, it's still going to be on your credit. But even if you don't go through with it, you cancel it, nope, it's going to your credit. I know of people who filed bankruptcy once and ended up with 3, 5, and 7 bankruptcies on their credit report, like they filed that many times. So that's why it's important to make sure you're monitoring your credit ordering your credit reports at least a few times a year. But even if you're not ordering the credit reports, you can go individually into the three major credit reporting agencies, Experian, Equifax, and TransUnion, and make individual accounts and see what's on there. You don't even have to order the credit report on paper if you don't want to. You can go to Experian.com, go to myequifax.com, go to service.transunion.com and make individual accounts and look and see what's on your credit. Guess what? Over 80% of people got some type of mistake on there. The biggest mistakes you'll see on there, they got 1,000 addresses on you. Get your whole life in there. You don't live there no more. Get them old addresses and all that stuff off. You don't live there no more. Get them phone numbers off. Get them old employers off. They ain't got no business being on your credit anymore. And that's also still tying you to old accounts, especially if you're doing the credit repair process. Go and get that stuff off your credit. You could do it, part of it electronically. If your names are spelled incorrectly, they don't let you do that, change that electronically anymore. You have to do it by paper. You have to, don't, yeah. So get all that old information off your credit report, the obsolete. You don't work there no more. You don't live there no more. Get all your phone numbers off. I don't even care if that's your current phone number. Get all the phone numbers off. If it's an email address on there, get it off. Get everything tied to you that you can, get it off. And yes, you can do that electronically. Everything's always not going to come off electronically. You can follow it up paper. There's like a letter. I have a template if you like, saying, hey, get this information off. But my clients who are doing credit repair, that's part of the letter as well. If they refuse to take some of the stuff off, you can also file a complaint with the CFPB, the Consumer Finance Protection Bureau, as well. So that's also an option for you too. So guys, I'm going to finish this with a part 2. Okay, if you got any questions, y'all, let me know. Throw some comments under here. Inbox me. Y'all know how to get to me if y'all need me. Y'all can text me at one of my numbers and I'll get back to you. Okay, I'm gonna talk to y'all a little bit.